All right, chat, we're live. What's up? What's up? The goal today is a lot of things. Today is gonna be a big revolution. Big revolution is gonna start from today on forward. But a quick 1 second. You got to one second. 1 second. One second, chat. All right, we're valid. Okay. We get straight into the weekly market recap. All right, folks, welcome to the weekly market recap. This week was very nice, beautiful week. We shoulda, coulda, woulda ended up on a 5 RR, but we ended up on a negative 1 RR on this specific week. And this week is a big changer week. This week literally is a big change in my trading because I'm moving on forward to entering only rejection block entries, right? But before we talk about that, because it's gonna have its own video, what we're gonna do is specifically talk about this week and what happened this week, which that's one part of it, which is gonna have its own video. But this week I was correct every single day instead of Friday. Unfortunately, Friday we should have been correct, but now shoulda coulda is not a good word to say at all. But our goal is to have a high, consistent, precise position in the market. And unfortunately, we were right every day except Friday. And Friday, I didn't see the daily S&T. So let me do this. Let me redo this. All right, folks, welcome to a weekly market recap. This week, we ended up on a negative 1 RR. It should have been a 5 RR week, but I did not see S&T with DXY on Friday and with GU as well, with S&T with GU, but I didn't see S&T on Friday. And that S&T happened during the session, which usually during this, when I analyze the market, that is my locked in bias, but the drawn located changed instantly during the session. So now we have to be more flexible, and now the bias could change during the session. And that was the only trade we had throughout the whole week. We had a bear setup. I'm not going to talk about it. I am going to talk about the lesson here. this whole week I had only one trade. This whole week, Monday we were right, Tuesday we were right, Thursday we were, Wednesday we were right, Thursday we were right, Friday unfortunately I was like, okay, this low looks, this fair value gap, daily fair value gap looks very clear to get tapped. We had S&P with the, the electricity high, but looking at the factor over here when the market was down here, I was like, man, there's a big ass gap on the, on the weekly time frame. It needs to be filled in a fair price, as well as I did not see the S&P divergence until I lost the trade. Eventually, after I lost the trade, I saw the S&P divergence, and the reason why I didn't see the S&P divergence, the reason why I didn't see the S&P divergence is because the S&P divergence happened during the session, which that literally affected my bias, and that would have changed my bias from a bearish bias to bullish bias. So this is a new problem I encountered where my bias changed during the session, during my trading time. So now, instead of trying to lock in a bias, right after I analyze the market, I have to constantly analyze DXY and GU for in the higher time frame, like daily, right? To see, okay, because daily time frame is shooting located, and daily time frame affects my bias. So daily time frame affects my bias. I need to be, cautious and look at it and have awareness. So I didn't see that happen on. I didn't see that. I didn't monitor DXY and GU during the trading session, which that is what led us to taking a loss. Eventually, we did have a setup to the upside, which was a 5RR, which was a rejection block long, and that ended up on a win. And eventually, you can see price reverse from there on forward. But this week is a very revolutionized week because I'm moving over to just trading rejection blocks, and there's a big lesson this week. Before I'm gonna talk about the rejection block later on. I'm not gonna talk about this video. There's gonna be a video on its own. But this week, the Friday trade, that's the only day we had a setup. This is the only day we're gonna talk about anyways. Other days we were correct, but if there's no setup, there's literally no reason for us to talk about it. On Friday, but keep in mind, on these days we did have setups. But they were very low quality. As you guys know, we don't take low quality setups. We want to take high quality setup, which can yield us a, over large sample size, can yield us a excellence return. And as you guys know, our goal is to only take high quality setups, which is A+ only, which is I don't even count it as a A+ setup. I just count it as a setup because all my setups have to be A+ setups. They cannot be anything below. Because my goal, as you guys know, real consistency in trading isn't about having 40% in a month. It's about having a consistent return, which is, between 6 to 12% a month, which is, my goal is not even 6% a month. My goal is 5% a month. It's not even that much, right? But that is what real consistency is, right? If you try to aim for 30% a month, you're going to have emotional psychology problems. But there's going to be setups like this, right? This is the last Friday rule from the rejection block entry. If you have setups like this can definitely yield you way more than 30. But I'm way more happy. But I'm happy enough to have a 5% return over in a month, right? My goal is not even to have this much, right? We'll have setups like this will offer me a lot of RR, but my standard is always 5% because if I put it to 30%, and I may just take wrong trades, which will not yield to that 30%. So you make me FOMO, this, that. So my goal is to take only 5%, which generally my rejection block entries, if it's a fixed RR, will offer me a 5RR. But if there's specific protocols, you may vary like 37 RR to 3RR or 4RR, right? The least being 3RR. But the 3RR trades are very, on occasion, they don't occur often. So there's usually above that most of the time. But yeah, that's that. And this week I'm not gonna talk about Friday, and let's get straight into it. On Friday we were looking at first, my bias was wrong, so I'm not gonna talk the wrong bias, but overall I didn't see the daily SMT with DXY, especially with the SMT with the Pacific SMT, which is ranges and IRL to ERL. In this case, I didn't see the daily IRL, and there was a daily IRL SMT, which DXY tapped it, so GEU does not need to tap it, right? Although you're probably wondering, well, you always want to trade the cause, not the effect. Effect is the EU, the cause is the DXY or GU. But that is some false fantasy people do. It's only that to those who don't know how to trade it, right? But yeah, that's the only thing I could say to you guys. But overall, this is our setup. Let's go to higher time frame for this specific day. I had a bear setup, which gonna talk about the rule. I wrote the rule down and I'm gonna read it out loud to you guys. But on a Friday, we had a classic expression profile to the upside, Tuesday low of the week. We as well had a we as well had a daily S&T IRL to ERL, daily S&T to the upside, as well as we had a big wick on this candle on a weekly time frame. It needs to close at a fair price, and market needs to go back up higher to close in that fair price, as well as going down to the lower time frame, as well as we had a close above equals higher prices. Now in the lower time for the market in context, we had a super at a low, super at a high, stable low, stable high, premium discount, tap the premium daily range high. We are in premium, so we're in discount. We're in discount of the daily range, but daily range high. As well, we're in discounts, so you want to buy up. As well, we have a New York profile 1 accumulation, 5 mid position non-expansion. As well as we have a bullish order flow. As well as we have a rejection below the low, looking for a break above the high. As well as we have a range. Our range is typically, in this case, our range would have been the daily low, but there's no specific range here. But everything else was here. So it still made it up a high amount of RR. Now going down to lower time between time frame to execute this trade, we had a right over here we're looking for the right time to purge and Nevada low, as well as we're looking for a resistance block entry. In this case, we had a Nevada low at the 1 a.m. low. We purged it out at the Pacific time between 6 a.m. and 10:30 a.m. And eventually we're waiting for that to get purged. We're looking for the right model 1. Then we're looking for resistance block entry. We had the right model 1 right over here. Just this candle right over here, as well as we had the resistance block entry, stop loss right below this. How can we put our stop loss tighter in this case? Because the wick is so big and it's Thursday and Friday, as well as it goes against the higher time frame draw on liquidity, which is the weekly time frame. So we can have a tighter stop loss, because since this trade right over here won't last for a long time. If you have a setup like this setup right over here will last a long time. So you want to put your stop loss more than usual. So if it's at 4.7, put a 5 pip stop loss, right? Just to cover that specific spread, because some brokers will go down lower and do the spread will take you out sometimes, right? Because the volume is down there. So if you have a trade like this, which was taken on Monday through Wednesday, as well as you went to high time and draw liquidity, then if it does that, you want to just secure a little wider stop loss. As you guys know, if you're in the right side of the market, you usually want to have a wider stop loss, just because market will have less chance of less chance of hitting your stop loss as well. If he does go down, guess what? You're still kind of secured because you're not outside the market. Overall, the market will go to your direction, so you shouldn't really worry about that, right? So having a wider stop loss is very important. This was from Romeo. It's actually correct. I've had a setup, and this, by the way, this is some insights here. But these are my specific trades that I missed and journaled. These are the trades I actually specifically journaled. This is the Friday trade right over here. Right, these are specific trades that we actually took. Right, Pacific trade. This is the Friday setup. These are all specific setups that we had in the market. You can see this setup failed. Why? Because it was a Friday trade, so it's inevitably gonna fail. So, well, this is a Friday trade as well. But the range is still respected, and we're going with the higher time frame. In this case, we were still going to higher time frame, but our goal is overall, it says it's Friday, go for risk take profit, even on this case. But in this case, you can see, although we're going for risk take profit, although got meant the range was still respected. The range still got respected. The NFP candle day still got respected. And on this day, we had a resistance block entry, but on this day, we never had a resistance block entry. But market returns back down to resistance block before going up higher. right? So that's why that's the difference. In this case, Richmond got tapped and we're not here to take profit. We're not looking for a trade. In this case, it didn't get tapped, so you got to retrace to on a specific time, and yeah, so that's that, and that's differentiates. Because this, as I said before, this may look like some hindsight chart, but these are specific trades that I actually took. These are all the trades that I actually took. This is the CPI long that we had it at fucking broke even, which was a 51 RR trade. This may look some unrealistic, but I'll show you guys most of the examples. Right, these trades right over here. What was I trying to talk about? They may seem hindsights, but these are resistance block entries here, right? You can see resistance block entry down here. We go back over here, resistance block entry once again, resistance block entry once again for 5 RR, because we're going to get the higher different withdrawal liquidity. Resistance block entry again, resistance block. All of these are resistance block, which they offer a high yield return, right? Resistance block again, 4.4 RR. This was a 26 RR. This is our setup, which we had a 15 RR. But if we were to enter the resistance block, it would have yielded in a 26 RR trade. And on these setups, on resistance blocks, we did not break even at all, because what I see is that market will tend to come back down. So my goal on this was to tell you guys why you need to have a wider stop loss, because what happens is market retraces back down to the rejection block sometimes, right? When it retraces down back to your entry, because your stop loss is going to be tight, so you want to have that little wider stop loss. So going back to show you guys even more example, which was this right over here, market will retrace your entry all the way back down before going back in your favor. So in this case, you don't want to get stopped out, right? So it's 2.5% stop loss. Market's highly going to stop you out. So you want to have a little wide stop loss. Either put it by the low near it, or if there's no low and the market's far away, just put increase the stop loss by 0.3 ticks to 5 ticks just to cover that spread. So in this case, if the market goes back all the way down here, you're covered, right? So the spread doesn't take you out, and the market overall goes back to your direction. You have a journal. This is the trade that we missed, which was the Wednesday. This was the Tuesday trade that we had. There's another setup, resistance block entry again. This is the setup where we had our wrong bias on this day. You can see resistance block entry again, plummeted. In this case, we're increasing our stop loss just in case if the market tends to go back up all the way, to have that. This is considered to be an insurance, right? Same thing over here. Shut up, boom. And on these days, you can see if you were to go to a objective take profit and you break somewhere over, if you break somewhere around here, market will chase all the way back down to your entry, stop you out, then go back to your direction. That's why I said break even is a scam, right? But when this is some hindsights, this ain't no hindsight. This is the trade that we specifically took on these specific days. So go down to lower time frame on the 5 minute on this specific day. I go back here. I don't want to go to bar replay, but let me change this real quick. How do I change this? All right, this is the setup we had, right? Our number one, resistance block entry, stop loss couple ticks below it. Yeah, so we're targeting the higher time frame, and this one, the resistance block entry. And Paul wondering, well, this has to be some crazy hindsights. If this theory is true, in the future, you should be wealthy. That's the goal, right? My goal is to have compound entries. That's why I'm changing over to only trading resistance block entries, right? Simply because of the compound interest. And I have a little, I've added 20K in a one dot account. So I'm going to grow that account out to a couple 100,000. And compound interest is what actually creates real wealth. And that's, as you guys obviously know, Warren Buffett and multiple other billionaires, the reason they got rich was through compound interest. And they took, especially in Twitter, some people I follow, they take 1 to 2 high probability setups a month, and they show up every single day. And one setup, when they occur, they make a lot. Their goal isn't to make 50% return a month. Their goal is to make 6% a month return monthly, and that's a lot. If you naturally compound that is a lot over a 12-month time, right? And that's a 5-6% only. You add up these, that's a lot, right? And these are very realistic. This is, what is this? This is a low time frame risk, high time frame reward. This is a Romeo. This is one of the Romeo's, what is it called? One of the Romeo's butterfly effect model. If you guys go check that out, it's one of those models. But we're getting off track here. But the goal is here is the Friday trade. We overall had a wrong bias. All right, and the lesson is, I can read it out for you guys right here, right now. Is, let me go get the rule because I wrote it down. As you guys know, obviously, if you don't write it down, then you will forget it, right? Let me go and get the lesson here. I must always monitor DXY and GU on the daily time frame every couple of minutes during my trading hours, which is between 6 a.m. to 11 a.m. for potential SMT divergence. SMT could occur on the daily time frame during the session I'm trading, and that could shift my bias since SMT divergence affects my directional bias. I consistently analyze both DXY and GU to identify any higher time frame SMT setups that could potentially shift my directional bias from being bearish to bullish, just like this. This SMT divergence occurred during my trading hour, so it could shift on instant. And the reason, if I go back all the way once again, the reason why this one went to a loss, right? If you go back over here, let me get the chart one more time. The reason this one right over here went to a loss, I can show you guys this beautiful trade. The reason this one right over here on this day, the reason I was wrong on this day, because my bias shifted through, or right on the session, right? My bias changed around 8 a.m. and I still had a long bias on this day specifically, right? My bias changed on this day to bearish, right, on the during the session. So that's why it's important. So you can see I have proof. And probably wondering, well, you're just doing a lot of, didn't you preach to not do back testing? This is back testing to specific things. This is it. I just don't go to lower time frame and just back to my strategy. I look at previous trades that I take, losses, wins, misses. This was a missed trade. I go back into it, look at it. Okay, I'm wondering. And then eventually, when I'm wondering, I look for specific things. All right, I look for, okay, what does the entry get tapped on? So more often than not, I check all my entries. And when I check all my entries, and when I check the register, because I check specific things, I check register block entry versus my normal entry, number one, and threshold entries. I checked it. That the register block entry yielded way more than my model one entry. Model one entry, I had losses. I took losses where time ran out, right? Because I would have it set up at 11 a.m. I'll take the model one, I'll get lost. And time factor comes a lot of play on this setup. It's like, okay, the register block alone itself yielded even more profit than my model one entries. Because model one entries, I checked my recent history of my trades, ended up on a 46% for the past 6 months, right? 46%. And I checked, okay, I'm like, this seems, with the losses, by the way, I said, then I eventually went back, okay, I would check all my trades, and eventually, this is where I checked register block entries. Okay, the register block entries, I would have ended up on a 245% return, with all of them being an A+ setup, which means I risk 5%. So if I'm having, like, let's say, this may seem insights, right? But this is a long-term goal. So if I take a trade with 1,000, right, which is a 5% risk for me, and I add 245x, that's what? 245,000. I'm not sure, 2.5 million or whatever, right? That's this trading, that's very realistic. Larry Williams did, $10,000 to $1 million, right? $1.1 million. It's very realistic. It's, because I like, as you guys know, how Romeo says, once you get the trading, you can make money out of thin air anytime you want, right? It's like basically a glitch in the matrix, like simple as that, right? Because it's controlled. So it's that definitely happenable, right? So if I risk that much, I'm making a huge return. I mean, if I add up the losses, even the losses and the mistakes I made, because I ended up with all the mistakes I made, I still ended up on a 46% gain. But I could have ended up what, a 211% gain with a 34 losses. I could have ended up with a what if and I checked my registration block entries with a probability losses on my registration block entries, which were only 2 probability losses, which I could definitely see losses happening more often than not. And as this says, my early stages of trading, losses are gonna pile up a lot, which is naturally good thing for you, because you lose the losses of the lesson, you're gonna grow. You're going to improve and get more advanced on the ladder. So you can see here with the losses, with the losses I have right here, with the 34 losses, by the way, with the 34 losses I have, I set up on a 48% gain, 46% gain, I mean, somewhere around there. Even with that, I still ended up right. But if I were to right now just take my Model 1 entries with a Model 1 probability loss, would have been only 4 probability losses. Everything else would have been a win at 16 wins. And my goal isn't to take a trade every single week. My goal from now on forward, since I have a larger capital, live capital, my goal is to take 1 to 2 high probability setups a month. Because I checking back into it, like I checked my trades. The 1 month I ended up in a loss. I checked the month. I was like, okay, what happened in this month loss? Because I tried to make a lot of money, right? And another month that I checked, I didn't force any setups. I ended up on a huge gain, right? And I ended up on a gain which is consistent, which it can repeatedly happen over time. So so where I don't blow my account out when that happens, right? So yeah, that's the lesson. That's the overall trade. You can see this trade right over here. It took a while to take profit. This trade up right over here, if you go back in time, this was a what? This was a weekly CRT here. Weekly, and keep in mind, these are the specific trade I took. These are signals that I give you guys out to you guys as well, right? You can see these are the setups that I give out to you guys. This before this kind of closed, there was a model confirmation. See, when all day came back down, you had to take profit overall, right? So that's why that's why I said my goal is to take only 1 or 2 high probability setups and have a huge amount of patience. Because patient games, the patience isn't the problem. Like, that's easy work. The goal is for me to take 1 or 2 trades a month, right? If I take 1 or 2 trades like at the moment right now, I'm still going to be looking to take those high probability setups. But my goal overall is to take 1 to 2 high probability setups, because keep in mind, it's compound, as I said before, compound interest, and my goal is very long term. And that 20,000 could turn to $1 million, 2 million, 3 million, and go even more. And guess what? I have the risk management, I have the edge over the market. I have the position sizing, I have the risk management. I'm going for a specific RR. The least RR I go for is the 3 RR or 5 RR, right? Risk block entry, because sometimes I could have an objective entry, and sometimes the RR entry wouldn't deliver because the objective entry would get tapped in reverse, and the take profit of it will get tapped in reverse, right? So this is the weekly market recap, and there will be a video section on it. This whole thing is gonna be a section on that specific. This may seem like an insight, but there's gonna be a section on. There's gonna be a video on this specifically, talking about the only risk block entries only. And this is the weekly market recap. So the lesson of the week is I must consistently monitor both DXY and GU on the daily time frame every couple minutes during my trading hours between 6 a.m. to 11 a.m. for potential SMT. SMT could occur on a daily time frame during a session I'm trading, and that could shift my bias. Since SMT affects my directional bias, I consistently analyze both DXY and GU to identify any higher time frame SMT that could shift my directional bias. And I'll show you guys an example here on this day where it happened during the session and it shifted my bias from bearish to bullish. And the other one right over here, where it shifted my bias from bullish to bearish, right? Because the directional bias changed throughout the session. And the lesson is I must not lock in entry, right? I have to trade the chart, not my locked in thing. I know I can't lock in a bias. I have to have awareness and be smart. And if the market changes, I change. I don't lock in a bias for that specific day. I change. I adapt. And this is a weekly market recap. Thank you for watching. Make sure you guys like, comment, subscribe, share, and join the discussion down below. This week would have been a 5-hour week because we only had one setup this week, which is the Friday trade. And unfortunately, just we still make mistakes, which is a pretty good thing, right? If you don't make mistakes, then you're never gonna make it because you need to make a lot of mistakes in order for you to actually to go to in a position where you are, where you barely making mistakes in all probabilities, which that position takes a long time. You must feel at first bitter, then you have sweet later. You have sweet now, then you get bitter later. Right? If you just sort of mess up your rules, do this, do that, do that, right? You're going to overall bitter later, and that bitter later is gonna hurt and take even more time, and you're gonna be older. You're gonna age. But yeah, thanks for watching. Make sure you guys like, comment, share. Join us down below, and I'll see you guys later. Peace out. All right, that's the lesson for number 1. So now I'm gonna talk about the weekly market recap real quick before we go on to the other one right over here. Let me go and get the weekly market forecast here. If I go back to DXY, or there's gotta be some sort of gaps here. One of them gotta tap a gap. I feel like it's gonna be SMT with this gap here. It's one pair is gonna tap that gap here, bro. There's definitely gonna be a gap here in a weekly, bro. I want to see that because this order block right over here is an IRL, which could deliver back to ERL over here. This IRL should deliver it, so we can go from an ERL back to IRL. This week, really cool bias. Oh, this upcoming week, yeah, this upcoming week does kind of have a right of a bias, but I want to see because this, bro, I feel like the market probably will not go down here. I want to see some sort of this. I think this right over here, because as you guys know, order block will have, it will play as a role as IRL. This week really cooked our bias. I mean, we were right, bro. We were right every single day here. I mean, because you can see right over here, you cooked our bias, but since we're focused on the short term, because long term, right? All of this less candles easier to predict. Long term could be wrong. We could be wrong the long term. And the long term will cost us way more money, right? Because if we try to stick to long term so much, we'll be wrong. If we're wrong the long term, but we write in a short term will overall look to long term. Although if we're wrong the long term, it will overall open up an eye to the long term, right? So we can't keep the same how can I say this? The same vision, right? Can't be like, okay, I'm gonna stick to the long term. You gotta stick to the short term. That's why we got smacked on this day right over here, right? So if we're in Friday, if we're looking for a short term to the downside, the overall the weekly time for the short term is bearish, you're gonna get smacked, right? Because the long term was bearish on Friday, but the short term was bullish, so you're gonna get smacked. So that's why you need to focus very much on the aspect of following the short term drawn liquidity. That's literally a mistake I encountered those mistakes so many times, bro. I look back into my losses literally yesterday from 6 p.m. to 11:25 p.m. I was watching the chart on the 4-hour. I didn't backtest. I backtested my trades. I looked at my own Pacific trade. I didn't backtest some random ass trade. Looked at my trade, saw all the losses, saw all the wins, saw the misses. The mistake, most of them were the short-term drawn liquidity and the fat high value low, as well as having the wrong number 1, and as well as entering on the wrong subtypes. I entered on the model 1 when it's supposed to be rejection block. I entered the threshold when it's supposed to be the model 1. I'm supposed to be, you know what I'm saying? So that's why I want to get in a position where, which I will at the moment right now. This is I'm only gonna enter one model from now on forward the rest of my career, because if we enter the model 1 and the market goes down to rejection block and reflects out of it, now we just missed out so much more RR, right? And those RR, very high probability. Those RR could literally, you could take that one RR for a whole month and you could be chilling for the whole month, right? You don't have to do much. You don't have to do much after that whole day, after the whole week, right? Because you're making more than what hedge funds make, what hedge funds promise to make over the 12-month period, right? So you're making literally more than them. So you could chill the next couple of days until you get a next high probability setup, which the past 6 months, this is literally January 1st, all down here. The past 6 months, I only had 13 setups for the past 6 months of me trading. And I checked a tweet from Romeo. He said that your goal should be taking 1 to 2 trades a month. Bro, but how are you biased? Your bias be wrong. You have 99% accuracy with a course. I'm just kidding. But wait, how can you bias be wrong when you have 99%? Hey, that 1% catches me, bro. You know what I'm saying? But the thing is, my goal isn't like we'll write the whole week except Friday. But you know what I'm saying? I don't care about the bias. I just make a joke, right? Just to piss people off, right? People get pissed off, like you know what I'm saying, Para, you get mad, right? When I say, oh, this guy's lying about 9% win rate. I don't care, but all I know, I consistently have a high margin rate of having the right, directional bias. Because look, the pattern, you go to lower time frame, the pattern isn't important at all. The pattern could be patternized anytime, right? We entered the short only from here. I entered the short over here. I was in deep profit. Guess where to go? To a loss, right? The pattern isn't the importance. The entry execution is not the important, because the pattern could be upside, downside. There's a pattern to the upside and to the downside, right? I'm not trading profit anymore, bro. I'm trading only 20K live account. I'm not trading no more profits, bro. Because what I found out, I said before, I've already answered that question so many times, that the profits are literally built to ruin you. What they do is basically, if you win, now they make you FOMO because you need 2% more to pass that account. If you lose, now they make you think I should buy another account, right? So these psychology rules actually, because of habits, right? Habits are a thing. That will go over to your they'll go over your live account. When that happens on live account, you're ruined, bro. Because that account doesn't go to, once it goes to 10% loss, it doesn't mean it actually goes to 10% loss. You have to go to the 0% loss, right? So you have to lose the whole account, right? So that when that happens, you would think, okay, I have to blow out the whole account and get another account. So you gotta blow out the whole live account. This is actually true. That's eventually, because when that happened one time, I had a profit trade when I lost it, right? I was in drawdown. I got a drawdown, right, on that profit, but when I took a trade on a live account, those thoughts came in, right? Those thoughts, bro, those are dangerous ass thoughts, bro. Nah, I don't get mad. I'm just kidding. I know I'm just joking with you too, bro. But you know what I'm saying? Like, my goal isn't to be right every time. My goal is to be consistently correct over a large period of time, right? Like, I could have a 40% win rate, but over a long time, I'm still profitable. So that's all that really matters, right? That's all that really matters. All you gotta care about is the long term, right? Because short term, you can see right now, currently I'm losing, right? But the goal isn't to, like, even when I'm losing, I'm not emotional, because I know over the long term, I will still end up making money, right? So short term, we just have to fix a lot of, short term unexpected outcomes that we gotta fix. We gotta fix some leaks, fix it up. But yeah, chat, my goal, if you go back over here, you see that Friday trade? Like, this may seem hint size, bro, to most of you guys, but this is the Friday rejection block trade right over here, right? And they got retraced to and eventually pushed back out of here. This may look hint size, but this is actually true, because you can see over here, but when the range high got tapped, but the range still got respected here. If you go back over here, this is the NFP candle. The range of the NFP candle still got respected. So when it tapped the rejection block, that could have been a good long. Now, Bro, y'all gonna see me cook with a 1 to 2 trades a month, bro. I'm only gonna take 1 to 2 trades a month from now on forward. I'm not gonna take more than that. And I'm only gonna take resistance block entries. And I was actually literally right now, I'm gonna make another video just for this because these are my trades that I actually took, that I actually executed. And as I check back, I look back at these trades, saw okay, what is the difference between these trades? This is the mistrade that we had. Remember all the way back there. This is a little mistrade. This is a trade I think this is a trade I took, but I made way less because of the mod 1 entry, and I'm supposed to enter it on the fucking position block over here. This is a trade we took for a 14 RR, but this would have been a 17 RR trade with no partials. These are trades where there's literally no partials. There's only fixed RR, and the fixed RR is going to be not fixed RR. Fixed objective take profit is going to be the CRT of the higher time frame, daily or the weekly. Primarily the weekly, but if the weekly is not there, it's going to be the daily. Next week, it may look like next week is probably going to be a good week to short it down. I do want to see that pullback next week into a Pacific range, probably to this weekly CRT low. I want to see a pullback to this weekly CRT low, tapped up in a weekly order block, make the weekly order block plays a role as a IRL, eventually go up higher from here, because order blocks are a type of IRL. I don't like order block IRLs, bro. They don't really make sense to me because I see them get disrespected more often than not. But let me go and make a weekly market forecast first. Let me get to this straight, right? The monthly time frame, we do have a monthly CRT and a monthly another week monthly CRT, but where our attention is now no longer the monthly, is over this 12-month time frame. We got beautiful here. Let me get as high as here. And let me go get the this is low. These are double purges of the higher time frame, purging out the low, high. And I think actually talks about this as well, where a real move occurs after the market takes out the high and the low, then it takes out the high, then makes the actual move to the downside, right? So it goes like, make it the visual shit. Let me get the visual. So it's gonna soup up the high, soup up the low, soup the high one more time, then make an actual move, right? Just like the Friday trade. The Friday trade, yep, the Friday's trade is a good example. Not that Friday trade, this Friday trade from the last week. Soup up the low, soup up the high, they go back down to the low. Either you have a soup or SMT, in this case it was the SMT, that eventually make the actual real move to occur, right? So even the higher time frame. Oh, title is live trading. Oh shoot. Okay. Let me change Let me change the title real quick. Let me change it to Sun Saturday stream. Wait, Saturday what? Charting session? But damn, chat. Recently, bro, chat, you can see this eye poke on my eye right over here. It's fucked up. Like that guy choked me out, bro. He choked me out so bad that, like, you know, his knuckles were over here, right? Trying to do some Dagestani choke on me. I was like, bro, what's wrong with you, bro? You gonna break my skull, bro. Calm down. Holy, these guys are not playing around, bro. But I cooked his ass, though. I cooked his ass. He may be good. He may be better than me in wrestling, but got him in boxing. Got his ass. Got his ass. I hit him in the stomach. He dropped because you know what I'm saying. Body shots are dangerous to the human. But I'm thinking, man, like I want to see. Bro got violated hard, bro. You know how Khabib did it to Conor McGregor. He did it to me, bro. Hold on, let me show you. Conor McGregor versus Khabib. Khabib choked. He did this shit to me, bro. What the fuck? He right over here, bro. Like he did it to me, but on my freaking head, bro. Hold on, let me see if I got it. Right over here, bro. Like, you know, cause he didn't do the throat. He did it to the skull, bro. Trying to crush my skull together, bro. What the fuck is wrong with that nigga? Like, cause when he choked me out, you can see this choke isn't, you know, on the, this is a type of a choke, right? Is this a type of the, is this is a type of a, what type of choke is this? This it's a, it's not a neck choke. It's a, you know, skull choke where it literally crushes your skull. Bro, he did that to me. Like, his kid had bigger, he was way bigger than me, but you know what I'm saying? He crushed my heel, right? Bro, I could literally feel the pain right now. Like, the bone is like, you know how sometimes when you get hit, you get a swelling eye or like something like that. You know what I'm saying? Literally, I could feel the pain there, right? Because he crushed my skull, bro. I was like, damn, nigga, calm down. I'd be here, bro. He did like, instead of doing this right over here to my he did it here as well, but because he, as I said, he has a bigger arm, right? So he crushed my whole spot over here, bro. I was like, what the fuck? Bro, I was like, bro, chill out, bro. I'm not fighting nowhere, bro. I was like, you know what I'm saying? Chill out. This is a training, it's practice, bro. He got a little aggressive because you know how people are, some people are, they're in PEDs and shit like that. So they had some problem with his, you know, emotions, but I was like, damn, bro. Don't take your anger out on me, bro. I didn't do nothing to you. So yeah, that's what happened, bro. That's why I got this right over here, bro. Thank goodness I tapped, bro. Holy. Because I wasn't gonna tap. I was like, bro, this guy has to crush my skull. Yeah, this chill, cover your mouth and nose, make it harder. No, this is, oh no, it's not me about that, bro. It's about, you know, crushing your skull together, bro. Because I could literally, my skull feels so sore, right? It feels like, you know, it hurts. Because I can't move around. Like, when I move around, like, it, you know, it kind of hurts my skull, right? I feel the pain right up here. It kind of hurts. If I feel it, it kind of, you know, it hurts a little bit. Oh, crazy ass guy, bro. Oh, that was a cool ass joke. That was like, bro, right after you did that to me, I did, bro, right after you did that to me, bro. You know what I did, chat? I went to the other guy and did it to him. I was like, you know what I'm saying? I was like, you know, I like, because I'm an all right, you know, grappler, but this guy's a professional level. He's in PFL, right? This guy's in PFL, right? So he's way better than me. So I went to the other guy, the other guy, which is, you know, not that, you know, he was a mediocre type of wrestler. And I did that to him. He eventually was like, bro, what the fuck are you doing, bro? This is a training practice trying to kill me, bro. I was like, bro, that choke right there, bro. Hey, that's some good ass choke. Cause you know, when you take the neck, it's so easy for you to, when you take the neck, right? You don't give them that much pain. But if you take the skull, bro, you're crushing the skull together, bro. And especially if a skull like this, like you crush the skull on your freaking chest or whatever you have right there, right? Crushing that together. Bro, you guys got, hey, I'm making a fight and I may show it to the public, bro, because I don't want to be going there and getting my ass beat and show it to the public. Oh yeah, this is the lesson of the loss. Bro, chat, imagine I go get an actual live a contract. I go there, I get beat, come back, and I make a video, you know, a recap of it to you guys and to my boy, you know, Trader, like, yeah, this is what I lost, you know, lesson learned, lesson learned. That's gonna be funny as hell. Make a video of it, like, yeah, this is a trade, this is the loss MMA trade recap. This is why I lost because of this, because of that. That's how I could have done better. You know, hey, that's actually a good thing because I even the professional levels do that shit. That's funny as hell though. Oh my goodness, bro. Hey, but when that happens, bro, I'm not letting the guy live. Okay. You know what I'm saying? Hey, Chad, just wait, just wait. I gotta train for the next 3 months for me to get a fight, bro. Because they said you're they told me because I've been there for a while because I had my fight already recently, so I have to wait another 3 months. Because I'm already, because the other guy fought wasn't that good, bro. Dude. He was they have a negative record, bro. They're making me, they're trying to maybe fight people who has a negative record. I was like, bro, I'm not fighting that negative ass record person, bro. I'm gonna wait for some killers. Bro, I have 3 people, one in UFC, 2 on PFL, bro. Holy. All right, so enough of that renting, bro. Once we get to UFC, hey, hey, chat. UFC and you a trader? Holy, my boy Trader's laughing. Hey, Trader, man. If I see you, if I come to India, bro. What is rule number one? What do you mean by rule number one? In what? In fighting or what? In fighting is to protect yourself, bro, at all costs. Because what happens? This guy I told this guy to go. Let's go light. He told me to go light because I beat him last time, right? I was like, bro, every time I go light, you hit me with something hard, and eventually I get unconsciously. I don't know. What I'm saying I want to defend myself. I don't want to lose my brain, right? What this guy says, let's go light. He hits me one hard punch, right? I'm like, bro, if you hit me one little hard punch, I'm coming even harder because, bro, because last time I want to win light, other guy knocked me out. You know what I'm saying? I was like, bro, I'm not gonna let that. I'm not gonna let that happen again. So next time if I fight, if he goes a little hard, I'm going to be harder, right? So just let him know to cool off, because these people are so emotional, bro. These people get so emotional. I think, but this is why I like trading, bro. The emotions are not that much. The emotions are not there that much, right? The emotions are very low. Because when I get this guy get emotional. I hit him once, they hit me harder. I was like, bro, this is a light spar. Why are you going so hard, bro? I can knock your ass out anytime I want. But like, you gotta calm your ass down, bro. Like, because if I go light, he told me to go light, and I go light with him. Eventually, if he hits one hard, and I get unconsciously, and I get a brain damage, I'm like, bro, I gotta protect myself at all costs. You know, what I'm saying anything happens, I gotta protect myself. I'm saying that's the rule number one in fighting. You gotta always, even if you like sparring, bro. If this guy hits you a little hard, bro, you gotta like not even if he hits you a little hard, you don't have to let him even hit you, bro. Let him know. You know what I'm saying? You mess around, you find out. Cause I ain't fucking with that shit. Cause last time when that happened to me, bro, it's not worth it, check. Cause they see light and they hit you hard, bro. Like, come on, bro. Cause bro, when I fought, cause you could tell just to them holding the glove, right? He held the glove like this, right? He held the glove like this. I was like, bro, that's not light, bro. You're holding the glove. I was like, let's fight like this, we could hit like that, but he's going like this and good. He's like, yeah, I'm going light though. I'm like, my boy, right when after that, I was like, okay, you could go a little hard. I'm gonna go harder then. I didn't even tell them. My mind was like, bro, I gotta protect myself, bro. Right after that, bro, hook the fuck out of that motherfucker. Hook them, get in the wall, hit him. I'm saying, this time fading up, hit him up, down, boom, and a bomb. I'm saying, got his ass. He's like, bro, you hitting me too hard. I'm like, bro, you're the one who's recording, bro. He's recording me. Number one. Second is, first he's recording me. Second, he's trying to record me for a clip, trying to get like a good shot so he can post it online. Third, he's the one who's trying to hit me hard. He's trying to show off. I was like, all right, bro, I'll show you, man. I don't need to record, bro. I don't need external validation. If I can do it, I will do it. You know what I'm saying? But let's talk about the weekly market forecast. Too much yapping. But hey, you guys told me to yap more. My boy Trader said to rant a lot. I rant about what happened recently. And I don't know. Unfortunately, yesterday I was gonna go to the practice. I was the only one to the practice. I was like, bro, where's everybody at? The coach said, oh, there's nobody coming today. I'm like, what the fuck? They don't want it bad enough. I want it more than them. I want it more than them. You know what I'm saying? But yeah, let me go get the hard time frame analysis paralysis. This may play as a role here, chat. This may play as a role. I will highly likely see this play as a role if she should definitely play as a role here. Now, if I go back to, let me take Twitter, bro. What actually? Nah, I don't take Twitter. Autoblock does play as a role as an Autoblock does play as a role as an IRL here. So let me go to the higher time frame. Let me record. Alright, folks, welcome to the higher time frame general liquidity. This is the market forecast where I predict the higher time frame general liquidity, where I anticipate where can the market potentially head to over the longer term basis, right? Over the next couple days, next couple weeks. And let's get straight into it. This is primarily for EUSD, GPUZ, and DXY. On Euro USD, we have a weekly ERL to IRL. But wondering, well, why did you say the weekly order block and not this weekly fair value gap? Although you guys know that the weekly order blocks are, although the IRL is actual, the fair values are, I mean, damn. The fair values are actual, God, I gotta restart this. Holy, bro, no way, I started a little too hard, bro. You see that the box is getting me a little bit. Let me start this. All right, folks, welcome to my higher time frame draw on liquidity, where I anticipate where the higher time frame draw on liquidity will highly head to. As I said in my last video, I want to see the market to go lower, but we were wrong. To the price action details, as you guys know, before the market takes the wick, market will tap the resistance block, go lower, tap 50% resistance block, then go a little bit lower. When it goes lower, it accumulates, gets enough order to push it up higher, and eventually attacks the high, which has the most resting liquidity. Which that is what I didn't pay attention to on my last market forecast, which is why we were wrong in a higher time frame. But although we were wrong, we were still correct in lower time frame because of the short-term draw on liquidity. Now, why is this so important? Why you gotta pay attention to market? Why do you gotta pay attention to the price action details? And this price action details is shout out to Romeo and ICT for this price action details. This is where I got that from. So before the market takes out this wick, market needs to tap the body first. Go lower, accumulate, which goes lower and accumulates, then go up higher to 50% mark, tap it one more time, then go lower and accumulate, then eventually go attack the high. So on this weekly time frame, last market forecast, we were wrong. In this case, now we have a higher, accuracy potentially here on this week. But we were wrong in the higher time frame last market forecast. I apologize, I didn't see the price details. But now it should be a little better off. As you guys know, it's a probability game, right? Losses happens, mistake happens. We can't be right 100% of the time. If I'm right 100% of the time, where is my $1 billion mansion? It's not here, right? So yeah, on the weekly, right now we have a weekly ERL to IRL, as well as a weekly CRT here. The weekly CRT has not been confirmed yet. The only time, the weekly CRT here has not swooped out the high. So I'm looking for this high to get swooped out first, then go lower, which should inevitably be happening this week. Next week looks better. Oh my goodness, chat. Oh, nope. I gotta talk a little clear. All right, folks, welcome to the higher time frame market forecast, where I predict where EURUSD will go in a longer term basis for the next week or next couple weeks. And last week, I apologize that I was wrong in my higher time frame market forecast, but we were still correct throughout the whole week. On this specific week was because the short-term draw on liquidity paved the way to the long-term draw on liquidity. As you guys know, short-term liquidity will always lead to draw on liquidity. If you're wrong about the long-term draw on liquidity, just follow the short-term draw on liquidity. You will lead to the longer-term draw on liquidity. And the reason why we were wrong from last week was simply because of the price action details. As you guys know, before the market takes out this week, it will first reflect out of the resistance block. You first reflect out of the start of the resistance block, go lower, accumulate, which it did, go up higher, tap the 50% of the resistance block, then go lower again, which it did, and accumulate. Then I'll eventually go target, attack the high of the resistance block. Because at first we were going from a weekly IRL to ERL. We were correct, yes, but there was a buy side liquidity over here. So we thought a weekly IRL to ERL, from weekly ERL back to IRL, but this IRL is useless because that there's a price action details involved, which is the resistance block price action details. And eventually, you guys know, I just told you guys why the reasoning here. Now let me show you guys an example of it in the past, because as you guys know, you must always have proof to what you do. If you don't have proof, and then it's not true. Before the market tail this week, market first tap the start of it, go lower, which it did, accumulate, then eventually tap the 50% mark, then go lower again, accumulate, which it did, eventually target the high. And how is this a resistance block? By wondering, well, how do I truly know that this is a resistance block? Because every candle has a wick here. How do you know that this resistance block is an actual resistance block? It's simply by looking for an order block. As you guys know, a order block at the edge of the order block at the wicks is where resistance block lies on. This is an order block. Let's look at liquidity. Eventually, this is how come this is a resistance block here now? Because the order block was there, right? So how do you know, once again, that this is a resistance block? Because this wick every candle is simply through looking for an order block, because the order block doesn't form every single minute. High probability order block doesn't form every single minute. So that helps you pave the way of low probability resistance blocks and help you focus on only high probability order blocks, which have order blocks in them. In this case, right up here had an order block supporting this resistance block. So the resistance block had right up here had an order block supporting it. So which what led it to be a actual resistance block. Then when that happens, then you could consider what? What can you consider? Then you could consider the price action details on resistance blocks where it taps the start, goes lower, accumulates, set the 50%, goes lower, accumulates, and obviously targets the high. But let's get to this specific week. That's a little lesson on the resistance block and price action details. And yeah, now we're wondering, well, how come this now from the at the moment we have a weekly ERL to IRL, which is the order block. Why does his IRL? This IRL filled the fair this IRL, this order block filled this fair value gap, so it plays a role as a IRL. As you guys know, order blocks are a form of an IRL, but I most of the time follow only fair value gaps on the lower time frame. On the higher time frame, through pricing details, order blocks does play as a role as a IRL, because I'm looking for this IRL to this order block to get respected. The tap if it eventually go from this IRL back to ERL, etc., etc. So at the weekly time frame, at the moment we have a weekly ERL to IRL, as well we have a weekly CRT here. I'm looking for the weekly CRT how they're getting priced first, then going down to the weekly CRT low. Now going down to the lower time frame. How will this weekly CRT high get priced first? Because we have context in the lower time frame, the short-term drawn liquidity. Right, as you guys know, short-term liquidity will always lead to the longer-term drawn liquidity. So right over here in a weekly time frame, on the daily time frame, is our short-term liquidity. The short-term liquidity is bullish, so which will take out the weekly CRT high, then eventually go down lower. At the short-term liquidity, we have a daily SMT IRL to ERL, a daily CRT SMT to the upside. So we could first go purge out this high. Let me go get the chart, purge out this high. Then eventually we purge out the weekly CRT high. Then eventually go down to the weekly CRT low and tap the weekly order block. And yeah, eventually the short-term drawn liquidity could go from a daily SMT IRL to ERL, eventually go from an ERL back to down to IRL and still respect the CRT here. So this is my weekly market forecast. This is all I have. Pretty easy day. Now looking over to GU and DXY, we're only looking for SMTs here. On GU, weekly time frame is cozy here. Okay, we have nothing on weekly time frame for GU. Going down to DXY, we have nothing down here as well. So now going down to daily time frame. The only reason why we are analyzing GU and DXY is because of the SMTs here, right? On a daily time frame with SMT with the correlated pair, which is EU. So has SMT to the ERL. Now going down to lower time frame, the other pair. Same thing over here. Go to this daily fair value gap that got tapped. You see, every pair has their own protocol. daily IRL back to ERL. So the daily CRT to the upside with a SMT with EU. So yeah, and our both main pair are EU and DXY. Thank you for watching. This is my weekly market forecast. Going over the higher time general liquidity. You guys like, comment, subscribe, share. Join us down below, and I'll see you guys later. Peace out. Damn, I messed up on that chat. Holy, my yapping skills is crushing. So yeah, chat. That's for this. Now, what else we gotta do here? Is we gotta talk about this. Do I really gotta make a video on this? Cause I don't wanna give out the sauce, bro. I mean, it doesn't even matter because most of you guys will not be able to do this anyways. No hate on you guys, but most people are lazy. Most of the herd are lazy, so it's typically normal to tell. Now, let's get straight into it. I just went back to all my losing trades, winning trades, missed trades. I went back to my journal the past 6 months from January till now, checked every single trade, and I found out something. Okay, this is not a good caption. Alright, chat, I'm not going to talk about this because I want to keep this to myself. Alright, this is just right up here. I don't want to say to the public because if I say to the public, some people may take advantage. And chat, if I go in depth on this type of trading, I'm not going to live stream. I'm sorry, unfortunately. If I go in depth like this, I will not going to go to live stream, but I will post a trade. I will post the signal, right? I don't want to give signals, but I will post it to you guys because most of you guys, I don't want you guys to take signals at all. If you take my signals, you should be losing recently. You learn from me, but don't follow my signals. Just do it yourself, right? But to those who want to take it, I will definitely post it. I mean, I have to post it anyways because of the befores and afters, right? Because I need this for the longer term for my hedge fund, which I'm trying to grade, you know what I'm saying? But long term, next 2 decades. So I will post these for that befores and afters, but I will still live stream for the next 1 or 2 months. Once I get a hang of this, then there's like, once I get a hang of this and eventually I get like barely get any setups, there's gonna be no point of me live streaming. Then eventually I'm just gonna go and eventually just post it out to the Discord and post it out to the public on Twitter. Then eventually, you know what I'm saying, not go live stream anymore. But these are the recaps of these. These are going to be talk. Should I talk about this? Should I talk about this specific thing here, chat? Should I talk about it? Let me think about it. These are the trades I actually missed, journaled, and recaps. I didn't go back all the way here because these over here I didn't take the trade around there. I took these specific trades that I actually recorded and I actually took live, and I'm trying to use this as an advantage. Like this one right over here. This is the CPI long, which my boy Trader got a trade, man. What you got a trade for, man? This one hit TP. You would have made a bank out of that shit. But yeah. Oh yeah, that's it though. But yeah, chat, I'll see you guys later. I'm gonna go and not gonna talk about this. Just gonna keep it myself. Because I don't want to explain it right now at the moment, but in the future I'll definitely explain it to you guys. Definitely, because this one, even if I explain the model to you guys, most of you guys will not literally take it because laziness. And I'll see you guys later. Peace out.